Ladies and gentlemen, thank you so much for the opportunity to talk with you all today. It took me quite a while to decide what the topic of today should be. And as you are all young professionals, I thought the best thing to talk about is value-based decision-making or ethical decision-making. Now, ladies and gentlemen, quite a lot of times we, as young professionals, are in situations where we either don't know what to do. You have to make a certain decision. You don't know what to do, or you do know what to do, but it's just difficult to make the decision for whatever reason. We call that an ethical dilemma. You have to choose one value above another, for example, loyalty above integrity or integrity above loyalty. And it's usually very difficult to make that kind of decisions. And I would like to show you today how we do it. An example of a value-based decision-making is the following. Ladies and gentlemen, for example, somebody offers you a gift. They offer you a gift in exchange for a certain service, etc. But you know the moment that you accept that gift, it might just unduly influence you. Now, ladies and gentlemen, on the one side, you think about the client that's offering this gift. So you want to be loyal to this client and considerate, etc. But on the other hand, you know you have to be honest. Honesty, integrity. You have to report bribery. You know, actually, you shouldn't accept. You're in an ethical dilemma. Now, ladies and gentlemen, corruption and bribery is a big problem across South Africa, and all over the world. I say even in Brazil, it's quite bad. Now, before we start with ethical decision-making, I thought let's quickly show you the newest stats. Now, this I got from PwC's global study. You will see it's March 2020. It's actually just before the big lockdown came in South Africa. And with regard to bribery, corruption, and fraud, they said the following. If you can look at the top, it says 20 to 34%. Now, for fraud perpetrated by senior people in an organization, senior management, is up from 20% 2 years ago to 34% this year. It's a big increase. And even something like accounting or financial statement fraud, there's also an increase from 2018 to this year with 12%, a big increase. Then it says in black, it says, you know what, the value is up, the volume is down, meaning incidents of fraud, corruption, bribery are down from 77% in 2018 to 60% this year. That almost makes us glad. But if you look at the next one, it says, but even though the volume is down, the value is up. 4% report direct losses of more than $100 million. Now, ladies and gentlemen, it's in dollars because it's a global survey. Economic crime at 60% is much lower than it was 2 years ago, but instances of higher value fraud have increased considerably. Then the question is, at the organization where you work as an engineer, is your fraud program delivering what you think it is delivering? 60% of South African respondents that addressed some kind of disruptive incident says, you know what, after we addressed fraud, corruption, etc., the organization emerged only stronger. Very good to know. But 42% of respondents didn't conduct any kind of investigation. 59% of incidents were not disclosed to the board of the company. 66% of incidents were not disclosed to a regulator or to law enforcement at all. And 72% of incidents were not disclosed to the auditor. Ladies and gentlemen, then the question is, who is it? Who's the perpetrators? Is it external perpetrators? Now, an external perpetrator is somebody, of course, like a customer, a vendor, a supplier, a consultant, an advisor. Or is it an internal perpetrator? Or do people collude when they commit bribery? There it is. It says external perpetrator, 36% of the instances. Internal perpetrator, the most, 41%. And there is sometimes a collusion, between internal and external actors, 21% of the cases. Ladies and gentlemen, it is a big issue. And that's why we have to know how to handle these kind of things. And we call it ethical dilemmas. Now, just a very short definition of what an ethical dilemma is. It's the following. An ethical dilemma arises when two core ethical values clash. Ladies and gentlemen, for example, something like loyalty and integrity. Two different values, the moment they clash or they compete, you are in an ethical dilemma. An ethical dilemma may be defined as a situation in which you as an individual do not know the right course of action, you find it difficult to do what you consider to be right, or you only find the wrong choice tempting. Now, ladies and gentlemen, that is exactly the short example I gave you. I said a client, for example, offers you a gift. When you accept, you will be unduly influenced. Are you going to accept? Then it's bribery or not. You're in an ethical dilemma. The moment you accept the gift, it's corruption, it's bribery. You have accepted the bribe, but you're also in something called a conflict of interests. Now, ladies and gentlemen, very big words. An organization, no organization, the state, etc. People, organizations hate conflict of interests. Usually a conflict of interests and bribery goes hand in hand. Now, what is a conflict of interests? A conflict of interests is the moment when your interests as an individual clashes with the organization's interests. You have certain interests, an organization has certain interests. The moment it clashes, it is a conflict of interests. Now, ladies and gentlemen, the moment you accept the bribe or the gift that might just unduly influence you, you are in a conflict of interests. Your interest is to get the gift, the money, etc. The organization you work for, their interest is that there shouldn't be any bribery, corruption because it's a crime and because it can just lead to damage of reputation. The question then is, but why is a conflict of interest wrong? Ladies and gentlemen, a conflict of interest is wrong because it will impair the ability of the employee to apply an impartial and objective measure in performing his or her duties. Instead of thinking if a particular action or decision will be in the best interest of the employer, the conflicted employee only thinks about himself and about his personal interests. That means his or her professional judgment becomes impaired. There is normally a financial motive or advantage to be gained by the conflicted person. Ladies and gentlemen, that's why we all, as young professionals, should always be objective, impartial, independent. And I've looked for a definition of objectivity, and the best one I could find is the following. The Chartered Institute of Management Accountants said the following when it comes to objectivity. It says, the principle of objectivity imposes an obligation on all professional accountants not to compromise their professional or business judgment because of bias, conflict of interest, or the undue influence of others. Ladies and gentlemen, that is objectivity. Now, when you are in an ethical dilemma, you have to choose which way to go. Now, the example I gave you of bribery is quite an easy example. It might be difficult in a situation where you are in, where you really don't know which way to go. And you will have to have a tool to decide, what am I going to do in this ethical dilemma? Now, on the screen, you will see there's 3 circles. The top circle says laws. That is the laws of the country. For example, tax laws. It tells you what to do. It tells you, for example, pay tax. Then the second circle says governance, policies, and procedures. That is the rules of the game. That's the policies of the organization where you work for. For example, your gift policy will fall into the second circle. But the third circle is the ethics circle. It says ethical values. The question is, what is the highest standard? Is it laws, policies, procedures, or ethics? Ladies and gentlemen, it's always ethics. The law is the high standard. Policies, the higher standard. The highest standard is always ethics. Please remember this slide when we proceed now. There it is again. And at the top it says ethical decision-making model. So the moment you are in an ethical dilemma, you use these three circles to make a decision. Which way to go? Which value will in that situation be more important than the other? There it is. Ladies and gentlemen, we call it the plus filter. Plus, P-L-U-S. You ask yourself the following questions. Question 1. What do the policies say of the organization where I work? For example, your gift policy, what does it say? L, what does the law of the country say? U, is it aligned with universal values? And then the last one, the S. The S is for self, or I say sleep. Will you be able to sleep at night? Ladies and gentlemen, the PLU I got from the previous slide I showed you. The P for policies, the L for law, and the U for the universal values. This is the test or the tool you use when you have to make a decision in a specific ethical dilemma. Of course, you can go further. You can also ask yourself the following questions. It's just extra questions. Does my professional or company code of ethics allow me to do this? Is it acceptable business practice? Is it in the best interest of my company to do this? Does it influence my objectivity, my impartiality, my independent thinking? Would disclosure of this specific matter or conduct lead to public embarrassment for my organization? Am I placing my or my employer's reputation on the line? Is the timing right? Is there a fair balance between conflicting demands or interests? Will inaction make things worse or make things better? Do I have a mandate to do this? What would the broader social impact be? And lastly, does it lead to upliftment of the community within which we work? Ladies and gentlemen, this is additional questions you can use when you make a specific decision. Now, ladies and gentlemen, when we do go on, I think the most important thing is when you are in an ethical dilemma, remember the value of integrity. A lot of people use the word, but they don't necessarily know what it means. So I went and looked, and I thought, let's quickly define integrity. Integrity is the following. I got it from Chief Justice Mogoeng. He said the following already in 2016 about integrity, and he took it from Professor Montgomery van Wart. Now, Professor Montgomery van Wart is a director of the Center for Public Service at Texas Tech University, and he said integrity is the following. Please look at this. It's the willingness to talk the truth. It's being consistent. It's treating others the way one would like to be treated. It's using the necessary discernment when you make a decision. It's striving for excellence in all one does and showing remarkable candor. Justice Mogoeng described the characteristic of a person with integrity as someone who follows through on a commitment, is fair in all their dealings, they act with wisdom, they apply diligence in all they do. Ladies and gentlemen, in short, integrity means you do what you said you will do. You said to a manager, to a more senior person, you know what? Friday morning at 9 o'clock, you will have that report. You do it. That is integrity. Chief Justice Mogoeng believes that a leader with integrity will be able to influence others, will be able to inspire others, to direct, to mobilize, to encourage, and to activate his or her followers to pursue a common goal with commitment while keeping momentum, confidence, and courage. Ladies and gentlemen, sometimes we have pressure. We have pressure, for example, when we do tenders. We tender for 2 million. Then the client comes back and say, you know what, we don't have 2 million. We have 1.3 million. And you have pressure. And Chief Justice Mogoeng said, and please look at the third bullet, he said, I believe in making money. It's good to make money. But life is not all about money. There are far too important things, ladies and gentlemen, like integrity. Ethics isn't optional when it comes to leadership. Our country can only move forward if leaders do the right thing. He encourages each of us to embrace ethical leadership and to dig deep and explore what it is, what we can do for the better of all our people. Ladies and gentlemen, lastly, we talk about ethics. We talk about ethical decision making. I'm telling you, please, have integrity. Keep your head above water when you are in difficult situations. The question then is, Simone, what is ethics necessarily? And does ethics really pay? Now, ethics is to do what is good, what is right, what is fair. Thus, integrity is a value, it's ethical. But does ethics really pay? If you look at the picture, it says ethical profit. Easy. The more ethical the people of an organization is, the more profit the organization will make. We can make it very easy and say, if nobody steals the coffee, the tea, the sugar, the stationery of an organization, of course there will be more money. It will lead to profit. But let's put it in easier terms. There were two Harvard professors, that looked at the effect of an ethical culture of large companies, 207 of them, over a period of 11 years. So over a period of 11 years, they took 207 large companies with an ethical culture. And what is the effect? And the effect was the following. Look at that, ladies and gentlemen. The yellow ones is where there was a culture of integrity, an ethical culture in an organization. The moment there's an ethical culture, the growth in revenues, the yellow one, you will see it says 682 compared to the 166. Growth in workforce, 282 to the 36. Growth in share value, ladies and gentlemen, look there. And then growth in the net income, 756 to 1. Studied by Harvard Business School, 207 large companies, the percentage. Ladies and gentlemen, it does help to be ethical. You are young professionals. We all are. We are the future. And the only way to curb and to stop something like corruption, fraud, and theft is to, number one, speak up if we know it is happening. But not only that, is by showing and leading with ethics. Thank you so much, ladies and gentlemen. I'm going to stop my share now, and I'll see you later for the questions.